As of this moment, on Friday, April 24th, 2026, Skillz Inc. is trading live at $8.90 per share, reflecting a sharp intraday movement that has completely reset the narrative for this stock. While the market is currently digesting a massive swing from yesterday's high of $20, the reality is that the stock is up significantly from its prior close of $3.68. This level of volatility is exactly why investors looking for investment help often find themselves staring at the Skillz ticker in a mix of disbelief and curiosity. Most people expect a company like Skillz, which has struggled with a declining stock price for years, to simply fade into obscurity. The reality, however, is that we are seeing a massive technical and legal squeeze that most retail investors didn't see coming. While the common belief was that this was a dead stock walking, the sudden influx of volume, surpassing 30 million shares in a single session, suggests that institutional activity or a massive short cover is fundamentally altering the supply and demand dynamics in real time. If you are using the Fidelity mobile app or tracking your positions through a Robinhood app, you likely saw the notification of a triple-digit percentage move and wondered if it was a glitch. It wasn't. The tension here lies between the expectation of continued failure and the reality of a massive legal catalyst. Skillz just secured a significant victory in its legal battle against Papaya Gaming, with a jury awarding Skillz $42.9 million in damages for false advertising. For a company with a market cap that was hovering around $50 million just days ago, a $43 million win is a massive influx of value that effectively doubles its liquid standing. This is why when you look at online investing platforms right now, the sentiment has flipped from bearish to speculative overnight. The market didn't just price in the cash, it priced in the validation of the Skillz platform's integrity against competitors. Despite this spike, many seasoned investors on the Interactive Brokers platform remain skeptical. The stock has a long history of fakeouts where initial momentum is sold off by insiders or institutional players looking for an exit. You have to look at the trading volume to understand if this move has legs. We are seeing intraday highs that haven't been touched in over a year, but the pullback to the 8.90 range shows that there is a heavy layer of resistance near the $10 and $12 marks. If you are doing your own self-investing, you need to be aware that the gap between $3.68 and $20 created a massive void in the chart that is now being filled with extreme volatility. This isn't just about the cash award, it's about whether the company can use this momentum to fix its core business model, which has seen revenue slide from its peak years. When we talk about online investment, the focus is usually on big names like Tesla stock or Nvidia stock, but small cap volatility like what we see in Skillz is where the most intense price action occurs. The institutional activity over the last 48 hours indicates that major players are either being forced out of short positions or are placing speculative bets that Skillz might finally be a turnaround story. This is a classic case where the market narrative was, this company is going to zero, and the reality was, the company just won a court case worth almost its entire valuation. That discrepancy is what causes these parabolic moves. However, the risk is that once the excitement of the legal win fades, the market will return its focus to the quarterly earnings and the monthly active user count, which have been under pressure. Looking at the broader context of online investing, platforms like SoFi Invest or a Fidelity brokerage account give you access to a wealth of data, but they don't always explain the psychology behind a move like this. Skillz has been a poster child for the post-SPAC decline, but its recent rebranding of the Archie segment into RCR and the shift toward positive adjusted EBITDA in that specific branch shows there is more than just a lawsuit happening under the hood. The expectation was that the entire company was a cash incinerator. The reality is that the ad tech side of the business is actually starting to stand on its own 2 feet. This creates a curiosity loop. If the ad tech side is profitable and they just won $43 million, is the core gaming platform actually the anchor, or can it be saved? Comment below how many shares of Skillz you currently hold, or if you're someone who sold out during the long slide down to $2. I'm curious to see if anyone caught this $20 spike, or if most people were caught off guard by the sudden volume. To understand where we are going, we have to look at what Skillz actually does. They aren't a game developer in the traditional sense. They provide the infrastructure for competitive mobile gaming. They take existing games and add a layer of competition that allows users to compete for prizes. The problem has always been the cost of acquiring those users. In the past, they were spending more on marketing than they were making in revenue. That is the old story. The new story is a company that has aggressively cut costs, reduced its sales and marketing spend, and is now focusing on quality users rather than just quantity. This is the kind of detail you find when you look for investment help beyond the surface-level headlines. The company ended 2025 with about $195 million in cash, and with this new legal win, their balance sheet looks significantly more robust than it did 6 months ago. If you're using Robinhood investments or tracking your Fidelity ETFs, you might notice that Skillz doesn't often show up in the major indices because of its small market cap, but for those into individual brokerage trading, the recent price action is a textbook example of a short squeeze met with a fundamental catalyst. The stock was heavily shorted because the market expected it to run out of money. The reality is that the company has managed to maintain a decent cash runway while navigating its debt maturity issues. Management recently pointed out that they have $130 million in debt that is now classified as current, which means they need to address it soon. This is the reality that might cap the upside of this current rally. If the market feels the $43 million legal win isn't enough to solve the debt problem, the stock could easily slide back toward its support levels near $5. Investors looking at investing sites often compare Skillz to the big tech players. While Apple stock or Nvidia stock are driven by global macro trends and AI, Skillz is driven by the microeconomics of mobile app stores and legal outcomes. The expectation is that the gaming market is saturated. The reality is that competitive gaming is still a massive growth area, but the winners are those who can control their customer acquisition costs. Skillz is trying to prove they can do that through their RZR segment. If you're managing a portfolio on a SoFi trading platform or using an interactive broker's account, you have to weigh the risk of a small-cap gaming stock against the potential for a massive multi-bagger recovery. The volatility we're seeing today, with the price sitting at 8.90, is a reflection of that internal tug-of-war between the bulls who see a turnaround and the bears who see a dead cat bounce. Looking at the Fidelity trading platform data, we can see that the bid-ask spread has been widening, which is common in high volatility situations. This means that if you're trying to invest online in Skillz right now, you're paying a premium for the liquidity. The expectation of a continued move to $30 is high among social media traders, but the reality is that the stock has a lot of overhead supply, people who bought at higher prices years ago and are now just looking to break even. Every time the stock rallies, these bag holders sell into the strength, creating a ceiling for the price. This is why the stock dropped from $20 back to the $8 and $9 range so quickly. It's a battle for the soul of the company's valuation. The future outlook for Skillz is a classic high-risk, high-reward scenario. The potential catalysts include further legal wins, a successful refinancing of their $130 million debt, or a surprise return to revenue growth in the next earnings report scheduled for May. On the flip side, the risks are just as significant. If the Papaya Gaming verdict is appealed and delayed, or if the debt cannot be restructured on favorable terms, the cash won't be enough to save the company in the long run. If you're looking for an intelligent portfolio approach, Skillz usually wouldn't be a core holding, but for a speculative sleeve in a self-directed brokerage, it's currently the most interesting story on the board. The gap between the $368 floor and the $20 ceiling is the playground for the next few weeks of trading. In summary, the narrative surrounding Skillz has shifted from a slow death to a volatile rebirth. The live price of 8.90 represents a market that is trying to find a fair value after a massive shock to the system. We've seen expectations of bankruptcy challenged by the reality of a massive legal windfall and an improving ad tech assessment. While the general belief was that Skillz was a failed experiment from the 2021 market bubble, the recent institutional activity and trading volume suggest that there is a real fight occurring for its future. Whether you're tracking this on the Robinhood app or managing a complex strategy through interactive brokers, the key is to watch the debt restructuring news. If they can solve the $130 million hurdle, the reality of the company might finally catch up to the expectations of its most optimistic supporters. The move from $368 to $20 and back to 8.90 is a reminder that in the world of online investing, things can change in a heartbeat. Skillz is no longer just a penny stock to be ignored. It is a live case study in how legal outcomes and fundamental shifts can force the market to reevaluate everything it thought it knew. Keep a close eye on the support levels near $7.50, as holding that line will be crucial for any sustained move back toward the double digits. The authority of the current rally depends entirely on whether the company can translate this court victory into a sustainable business strategy. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, subscribe for more updates.